Hello, Maverick traders, and welcome out to your weekly currency room. This is Rocket here, and as always, we'll be taking a look at this week's price action, and most importantly, talk about our upcoming week ahead. Let's get into it. As always, we'll be taking a look at broader market analysis, break it down, take a look at news, take a look at currency baskets, and then we'll take a look at some possible setups ahead. Let's get into it.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
So here we are in this first official trading week. I mean, this is where we see market volatility return to the markets. And we definitely noticed some market volatility this week. So from the equities front, we see an equity that's rallied to another new all-time highs. But today's jobs report definitely caused a bit of a selling on the news. We saw an initial bump on that news, and then we just sold off after that. So we'll see where it's going to go. I think markets are at a very interesting point where economic data, especially the jobs numbers, are weakening. But at the same time, are we going to see more of an increase in inflation? Now that's what we call stagflation. That's where we see economic output is not there, and then we see a bit of a inflation, sticky inflation, or prices going higher. So this is where we are. I think we'll find out, especially in the next couple of weeks. A lot of data coming out. So we'll discuss that when we take a look at next week events. But so far, if we take a look at volatility, we gapped lower after this Labor Day weekend, and we went higher a couple of days. So there's a lot of back and forth, and that's what we call volatility, where we see a back and forth movement. And then this is where, statistically speaking, that we are at a point where from September to late or mid-October is usually the most volatile time, or we've seen bigger crashes around this time. A lot happened around this time. So this is where we need to be more prepared for volatility as we get this back and forth move. On the top of that, we get this economic data that's just going to drive the moves higher or lower. Now, talking about economic data, today, again, we had the U.S. jobs report, and that really plunged the U.S. dollar and the yields lower. So we are seeing this, we've seen the numbers leading up to this, pointing out to a slower growth, and then we're looking at the employment number not so strong. So today, I think the expectation was 75,000. It came at barely just 25,000. So overall, ADP numbers early this week pointed out weakness. So this is more like the data that's confirming that the employment situation is weakening. Now, when we take a look at the market expectation for rate cuts, we are now expecting 3 rate cuts by year end. And this is something I've talked about it many times. When we take a look at September rate cut, that's about 95% priced in. It's almost like that's totally given. Now, the big question really is the following rate cuts. When we get stronger data, the rate cut expectation goes down. And when we get weaker data, those expectation goes up. So here we are now expecting 3 rate cuts. I still think it's a bit aggressive. But at the same time, if the economic data continues to weaken, then I think we probably see that materialize. But I think as we look at the Fed, we have heard from the members, they are looking for a rate cut in September, but the other rate cuts are still data dependent. So we are back in this, push and pull sort of a game. Now, when we take a look at crypto markets, they are sort of underperforming the SPX, but overall, outside of the Bitcoin Cash, Bitcoin Cash really had a big move this week. But outside of that, I'm not really seeing a whole lot of participation. Ethereum, which was one of the outperformer, is underperforming now. Bitcoin still in a downtrend. So overall, don't really love the crypto space. There's pockets where we see a movement. In the summertime, we saw Ethereum really move. But outside of that, we're not really getting a big group participation. So let's just take a look at last week events. And here we are. Let's just start with the ISM. So you can see that the US ISM manufacturing was slightly lower. We had the ISM numbers services PMI out of the US that was higher. But then take a look at the area, the jobs number, the private number that came out. That was lower than expectation, 54,000 versus 73. And here we are taking a look at today's jobs report was merely 22,000 versus 75K expected. So this is again pointing out to some more weakening underneath the economic numbers here. Now the unemployment rate did not change. It stayed at the expectation was at 4.3 and it stays at 4.3. It didn't come higher or lower than expectation, so that was more in line. But really the big surprise was the employment change was much weaker than what it was anticipated. But let me talk about a worst jobs report. Canada. Take a look at this job number. Not only their unemployment rate changed from 7 to a 7.1, we also had a pretty bad print, 65.5 thousand jobs lost. Now, when I was looking at the numbers, this kind of goes back to 2022 when we had a really jobs report from Canada. So this, again, I think we're going to take a look at Canadian dollar here and talk about possibilities. Is this going to drive the Canadian dollar a bit lower? Because now with this number, the expectation there for a rate cut has increased. Now, outside of all this, we had the U.S. job openings early this week, and you can see that was also pointing out to a lower number, and that's again confirming a weaker employment situation. Outside of that, we had the Aussie GDP that was slightly higher than expected. Aussie definitely has done well overall in this past 2 or 3 weeks, something we're going to pay close attention to. Outside of that, haven't really seen a whole lot of change. I think most of the movement has been around the US economic data. Now, let's get into last week's review and take a look at the numbers overall. And let's just jump right into the broader markets. So you can see that the S&P slightly up. So it's not really a blockbuster week. We started off much weaker, then we had a bit of a rally, and then here we are pulling back. So, I think markets are still still worried or still trying to figure out where it's going to go from here. After the stellar move that we've seen this past summer, markets are still a bit more undecided where it's going to go. Now, World Stock Index, 0.32%, looking strong. Crypto, even the basket says 2.93%. Realize that most of those gains has really come from Bitcoin Cash. So if you take a Bitcoin Cash out, you'll see the numbers were not that so great in the crypto markets. Where we saw big numbers were gold. Gold actually hit new all-time highs this week. So pretty strong start for the gold after this Labor Day. And here we are. The oil market is down 3.89%. So overall, you can see it was a mild week in the equity markets. A lot of back and forth. I think that's really where we are. So here we are. Let's take a look at the chart for the S&P. And this kind of gives us a picture. Overall, you can see that this is a bit of a range, even though we did actually poke above new all-time highs. But today's candle don't look that strong. And I think that's something we're going to pay close attention to going into next week, especially around the US data. Initially, if you look at the price action, after the jobs report, the price action, the markets actually gained. But then slowly later, after the market opened up, we noticed they all kind of gave up the gains. So we are this economic downturn, or as we are seeing this slowdown, I think will slowly catch up with the markets. But next week, when we get the inflation number, I think that's going to be the bigger one, because if those inflation number climb, remember last month we had a PPI report that was the hottest number in the last few months. If we start to see a pattern like that, then stagflation is the biggest worry for the markets. And I think that's going to be a bit more difficult situation for the markets. So that's something we're going to pay attention to next week. Now, let's take a look at outside of that. Take a look at where we are with the percentage change for the week. This week was not a block, like I said, it's not a blockbuster week where we saw big breakouts. We had a big move, but you can see that the dollar went up early this week. And then even with a down move today, it's still not down so much. Yen, mostly flat. Really, the big outstanding move this week was the CAD. So we are going to pay close attention to the CAD here. Outside of that, European currencies continues to dominate, especially when we take a look at Euro and Swiss franc. Even though those currencies had a nice move, but most of the gains really came from today. But outside of that, most of the things were still sideways. So not a whole lot of change happened in Kiwi. You can see that not really a lot of participation there. Aussie, I must say that was the one that I was impressed by, but it's also right against that range high, which we are kind of looking at this number and say, well, is this going to stall right here or is it going to pull back? So that's the one currency we'll take a look at when we take a look at those numbers. Now, here we are with the crypto markets. And like I said, look at the gains in Bitcoin Cash, 12.41%. Outside of that, Ethereum was down. Bitcoin was slightly up. So not a big numbers when it comes to the crypto movements here. So I think as we talked about how cryptos are more like tied to, the risk on, risk off sort of thing in the markets, where when markets are kind of holding steady or we're seeing a lot of back and forth, we're not really seeing those big gains coming in especially in things like Bitcoin and Ethereum, which is what we primarily focus on. So let's just jump into our market analysis, take a look at market outlook, and see where we stand. So here we are at the S&P chart. We just looked at it. This is the prior resistance. As you can see, just fall right back below it. I will consider this more a range bar price action. If it does give up this 20 and the 50 moving average, I think this is the area that you need to watch out for, where we can see a bit more volatility picks up. Now, you can see early this week, we had a bit of a gap lower. We just got right below that 20 moving average and pretty much went up higher from there. If this time, if it gives up that level, you can see there's not a whole lot of difference between 20 and the 50. And this is always a bit of a holy grail that we follow. If the prices are above 20 and 50, it stays in an uptrend. But if the prices move below 20 and 50, now that's where we start to see a trend changing move. Outside of this, let's take a look at, take a look at the Bitcoin or the crypto markets as a basket. You can see it's just kind of going sideways. So don't really love that space. You want to be in there when you see a big advance where everything's sort of moving. Right now, unless you're cherry picking, not moving as a whole. Here's a big sort of a move that we saw in the yields, and that really started off after the job openings that came out on Wednesday. So there's a big move down here. Then we have the numbers yesterday, and here we are with the number today. You can see that this has really brought us the expectation down. The yields are moving down, and then we're seeing the expectations. So here's the Fed tool that you can follow to see where the expectations are. And here we are. We were sitting at about 45% before this news event today for 3 rate cuts, and here we are now above, up to a 70% chance for 3 rate cuts. So if you break it down month by month, this month is, I think it's a plus 90% chance for a rate cut. Then it goes up to like 75% for October, and then for the December one, it goes up to 70%. So markets, again, pricing in much aggressive rate cuts here. But I think that inflation data next week is going to be the key. So that's what we're going to look at the schedule here. And let's just highlight this important days. Here we are with Wednesday. This is the PPI number. Remember last month, it jumped up to 0.9%. That was, again, quite a steep jump. They're looking at about 0.3. If this comes out hotter than expected, I won't be surprised that the yields pull back and the dollar strengthen, and some of those expectations sort of pares down from a 3 rate cut maybe down to a 2 or 1 rate cut. I think that's something we're going to pay attention to next week. Here we are with the US CPI, same thing. They're looking for not a whole lot of change, and the year over year is supposed to be up at 2.9. But these numbers, as Fed has highlighted, these tariffs and all, we might be seeing a bit of a delayed effect. And if there's a delay in effect, while the economy is slowing and inflation picks up, this is not a good scenario. This is actually a worst case scenario for the markets. So that's pretty much out of the US that we're going to pay attention to next week. Outside of that, we have the ECB rate statement. And again, they're not expecting any change. 2.15%. They're looking to hold it steady. I'm not really seeing a whole lot of expectation there. So I think unless we get any sort of guidance, dovish or bullish, maybe that's going to propel the euro higher or lower. I don't really see a whole lot of weight on that. I think the bigger weight here is going to be on the US data. And then on Friday, we have the GDP coming out of UK, and then we have the preliminary consumer sentiment. But really, if you want to highlight those 2 days, I think Wednesday and then Thursday. These are the 2 days we're going to take a look at these inflation numbers, and I think there likely to be a bigger move off of that. So when we look at this week outlooks, when we look at trends, I think market trends remain bullish, but I'm definitely expecting a bumpy road ahead because, the way we are with the volatility, with the market cycle, and with this data coming out, I think things can change really quickly. And that's really where you want to be able to be in the driving seat and making changes as the market changes. Then that's what we get in these volatile markets, is that it requires more adjustments. Where when volatility is really low, it's more like a cruise control. So central banks, we have the rate statement. Again, if you're trading the euro, watch out for that. Personally, I'm not really expecting a whole lot from it. Unless there's a surprise, that's where we're going to see a big move. So Wednesday and Thursday is where my primary focus is. Now let's get into our currency analysis and take a look at things one by one. And let's just start with the cryptos. And this is, again, let's just start with the Bitcoin. And I will highlight one of the reasons why I'm not really in love with the crypto here. Because again, here we are, Bitcoin, we are below the 20, below the 50. So this is still in a downtrend. In the shorter term, velocity-wise, was doing a little better, but overall, I think it's still in a downtrend. Now, the only thing that looks like in an uptrend is the Bitcoin Cash. That's the one, but it's almost hitting that resistance again. But when I take a look at Ethereum, you can see that Ethereum has kind of slowed down as well. Remember, there's a massive gain that happened throughout the summer. And, the question really is that trade over? Well, it's not really, right now you can call this a consolidation phase. So we don't know if it's over yet or not until we start to break some key levels higher or lower. But as you can see from the trend score, we are at a 0, which means that it could go either way. Here, the last one is Litecoin. This thing is also, this thing never advanced as much as you saw with Ethereum. So this is kind of moving along the lines in a sideways range. So outside of the Bitcoin Cash, nothing really looks good over there. Now, let's just take a look at our Forex outlook. Now, let's just start with the good almighty US dollar. And one of the things I highlighted, and I posted this in our Discord group this morning as well, is, we got this report today and you see a big move down. And then, and whenever you see that, you also have to kind of look at things in a bigger scheme of things. Where are we? Are we in a downtrend, uptrend, or are we sideways? And I must say that, you have to kind of keep in sort of mind that we really haven't gone anywhere. In a lot of currencies, we haven't really gone anywhere. We just kind of traded in a range. So even though we had a down move today, it doesn't mean just carry over into next week. And that's one of the characteristics with these range-bound moves. Sometimes these ranges are clear, and then sometimes ranges get smaller. But then these movements are, we can see a big bullish candle over here. This candle looks pretty good over here, and here we are erasing that move. So there's a lot of back and forth. So it's not like something where you just, move in one way aggressively, buy the pullbacks. Things are still in range. So one of the key things that we're looking into as we are in this fall trading is breaking out of these key support resistance level. So until we get a confirmation, treat it as a range bound. And until it start to break lower or start to break those levels, that's where we want to play it more directionally. So remember, pivoting is very important in trading. So we have been used to trading in a sideways range for the most part. But now when that shifts to a directional trading, then that's where we need to make that shift as well. But for now, as you can see, trend score is just a -1. So I'm not really super negative on the US dollar because price action is not telling me so. Compare this to last year. Like last year, we had the similar thing where the markets were the yields were coming down pretty fast, and we had a big rate cut in September, and dollar was doing very poorly performing as well. That's not the case here. So this is the sideways. And again, if we get any economic data that's better than expected, or if we see a bit of a jump in inflation numbers, guess what's going to happen? It's just going to bring you back up. So a lot of back and forth. That's what we expect here. So don't really have a change here. Treat it as a range bound to, range bound, and look at these key levels. Now, the Japanese yen, well, very similar story. Like last year, the yen was one of the best currencies in the summer. And here we are. This thing has really gone, for the last one, not gone anywhere. So here's the support. That's a resistance. This is a very back and forth price action here. So yen itself doesn't really have a strong trend. Now let's go into the Swiss franc. Now this thing has been strongly trending, but take a look at this resistance. We have been pretty much not going anywhere for the entire week. So you can see that entire last couple of weeks, this thing has not gone anywhere. And then today on a risk-off movement, we see a bit of a jump in the Swiss franc. Now the question is this the breakout I want to buy? Well, my rule for breakouts is that need a confirmation. So we are touching that resistance, but it's not breaking out of the resistance. So I don't have a confirmation yet. I need to see a confirmation to break above it to confirm a breakout. Now, same thing in the euro. We touched this level a couple of times. Even though euro looks pretty good on the trend, I don't have a breakout confirmation yet. We had a nice movement today, but it hasn't really taken us out of that resistance. So these are the two currencies that I'll be paying attention to next week, and for follow through. And for a follow through, we need to see a confirmation of that resistance level. And then here we are with this British pound. And if you go back, you might find 3 or 4 sort of tops in this British pound basket here. So I don't really love the breakout play. I think this probably goes sideways for a little bit here. Again, doesn't have, it's not the best currency, it's not the worst currency, and that's where you get the score a 0. It's not leading either way. So it could be strong one day, it could be weak one day. That's just the way it goes. I mean, take a look at this big nasty candle that we had just on just the beginning of this week, and over there we broke below these levels, and it looked a lot bearish. And here we are catching a rally. But again, like I said, I won't be surprised to see if it stalls again at that level. So only point I'll be convinced if we get a confirmation of that breakout. Now that leads me to some of the growth currencies, and CAD moved today. Now Canadian numbers were definitely weaker. Expectation is now gone up for a rate cut. Now when it comes to trend score, this is again showing me a more weaker score here compared to the USD. So I think that's where I like the CAD short a little bit here. But CAD is a very choppy trade. If you really zoom out, I mean, I have only 2 months of data over here, but if you really zoom out to like last 4, 5, 6 months, you'll notice that it's just going sideways. So, is this big move is a catalyst for us to break lower? I think this is where you need to see a follow through. So if you start to break out of those key levels, I think that's where we want to be more interested in trading the CAD directionally. Right now, again, this is the only one that I actually like on the short side. Here we are -2 and the velocity is a -3. But keep in mind, in the grand scheme of things, where the support and resistance levels are, because most of the things are just range bound. And talking about range bound, I mean, take a look at where we are with the Australian dollar. And I talked about this earlier this week where, I was very impressed with this little rally that we saw. And then look where it stalled. It stalled right against that resistance. And you can see that the 1, 2, 3 times you're getting big tails. When it tries to break out, it pushes back. So don't really love the long here because of that price action that we're getting unless we break above this resistance here. So I think my call here, this probably be a range bound currency. Might stall a little bit here around this area. But as long as it stays around this area, maybe it can gather some energy and break out. But if it just fails and just fall right back below, I think then we just have a range in place. And then lastly, we have the New Zealand dollar. And I think this thing, even though it's a -3, I mean, we had a big move over here. And pretty much after that, this looks like a little bear rally pattern to me. So don't really love it as a long. I still like it as a short. But I think for this to materialize, we also need to see the equity markets weaken as well. Because then that will be a perfect setup here. This is the setup that I'm looking at for the Kiwi off this little bear rally if it breaks the support. So this is another one that I'm paying close attention to in the next coming weeks as we get some bigger breaks. Then those are the ones that we need to pay attention to. So here we are with our trend scores, and like I said, Euro Swiss franc continues to rule. Aussie is number 2, but that's pretty much it. We have a couple in the middle, one slightly lower. And I think Kiwi and CAD are both now on a -3, trend score. So those are the ones we pay close attention to. But dollar, I think, is really the bigger play here. And again, you've seen it, how dollar move a nice 1%, 1.5% on some of the news. And I think that's the one where we can keep hunting But some of the things that are not moving so much, like the yen, you can see the moves are really muted. Then we don't want to be so much more aggressive. So based on the trend score, it really allows us to decide on the strategy and the how long you want to hold that trade for. Something that has a not a strong trend score, they tend to be good, the short-term trades. Where those trend trades that has a good trend score tend to be good trades on a longer-term basis. So now, based on that, let's just jump into the possible trades here and take a look at some setups.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
All right, so as always, let's just start with from a broader markets and see how things are moving, and then we'll bring it down to currency pairs. Here's the broader markets. You can see that, and this is what I was talking about earlier, is, we had a movement nice up here after the job support. As you can see, pretty much after that, we had a pretty nice selling, and after that, we just haven't gone anywhere. So we're just stalling right at that 20-day moving average. So until these levels are broken, we don't want to be too aggressive calling it a short. But at the same time, we want to be cautiously bullish as well, because this is where we're getting this back and forth price action. So I am more on the range here, looking for a confirmation where it's going to break. Now, let's just take a look at where the volatility is. So you can take a look at a VIX to just take a look at where the broader markets are. As you can see that we have spent, we are kind of sitting at the lows for the year. So markets have been very quiet the entire summer, especially take a look at where June and July was and August was. So here we are. You can see we started off with a bigger volatility. We're getting some spikes here and there. So this is where I think as the volatility increases, you'll start to see these VIX rise as well. Now, let's just go into the bond markets first, see what the aftermath of the bond market is here. You can see that we had a big move here off of that, but pretty much after that, we've kind of gone sideways. I think this is going to just float here till we get the inflation data. And at that point, I think it can move either way. As you can see, this is the support, and it has clearly broken the support. So I think yields are definitely pointing it lower. But when we compare this to the USD, now let's see what the US dollar is doing. Now, I'm going to take a look at a 15-minute chart on the US dollar as well and see, look what happened. The dollar on that news gap lower, and it's almost like filling the gap. I mean, take a look at the last hour or two of price action here, and the dollar has kind of gained quite a bit nicely here. And I think this is the reason I don't love this price action. If you're trying to call for a dollar to break that support, this is not it. Like, if the price action dips lower and recovers like that, now that's just showing you some underlying strength. Now, that's where we are. So now when we take a look at the daily chart, like look where we are seeing is finding support. We're finding a support right at the 50-day moving average. So this thing again is sideways. You know what looked interesting to me today was I was actually watching dollar CAD, and usually these are the two currencies that are positively correlated. But if the CAD stays weak and dollar does strengthen, I think we can perhaps take a look at dollar CAD. Now, this is not the good looking chart here. So where does it need to break to catch some traction? I think it's about 139. Because once it breaks at 139, then you're attempting to go towards 140. As you can see, early this year, we were at about 145. So dollar CAD kind of look interesting to me here. I mean, look at the last 4 or 5 days. It has been on the upside here. But again, for that, we need the CAD to be staying weak. And here's the CAD basket. And this is what I want to highlight here. It's just a congestion that you have in the Canadian dollar here. So as you can see that this is a key level of support where I just drawn the line. We have broken that a couple of times. We retested it here, and here we are getting close to it. Now, if we start to break or continues to break lower, then I think that's a clear signal that CAD is breaking out of that range, and we want to take advantage of that. And I think that's where my dollar CAD is something I'll pay close attention to as well. But just keep in mind, even with the big drop today, we are still at the bottom of the range. So until or unless we really see a break of these ranges, you want to keep your powder dry. You don't want to go too aggressive saying, hey, I think this is going to break here, because things can change really quickly. And that's just the beauty of volatility. Here we are with the Swiss franc. Now, this looks pretty good on a further break up, especially if the market weakens on that. So, this Swiss franc just continues to print. It seems like every time it slows down, it just gathers energy and it breaks out. And you can see that it's still above the 20 to 50 moving average. And this is one of the reasons why we don't want to short anything above those two, because that's where we still see, a sort of a flagging pattern taking place here. So I don't ready to pull the trigger yet, but we'll see where it goes. So we looked at everything here. Now, majority of things, Aussie is another one that we looked at. Now let's just take a look at Aussie CAD. Is this the one that we want to pay attention to? Well, this is a nice clear level that it just broke above. Now the question is this a trade I like because I like the Aussie long, or is this a trade I like because I like the CAD short? So you always need to define or answer those questions. So if the Aussie does break above, right now I don't love this price action here, because you go back in time, you notice whenever you see these repeated tests of these levels, that's not that's where I would be more hesitant. The path to least resistance is where we start to see a much better trending move. So it's stalling right here. I don't love it here. But if the Aussie does, hold on to this level and continues to go higher from here, maybe just taking a break, I think Aussie CAD definitely looks interesting to me. Here's another one, Aussie Kiwi, we were looking at early this week. And you can see that this thing is also stalling right up against that resistance. So these levels, again, continues to be very predictable when it comes to these pivot and trend changes. As you can see, Aussie Kiwi, and you look at a daily chart, you realize that going back to last year, we have peaked this area 4 times. And I think this is one of the reasons I'm a little bit hesitant on the Aussie here. Now, if the CAD stays weak, can I pair Euro against the CAD? Well, Euro against the CAD had a massive move up. Now this thing looks pretty nice. On the direction, again, this one looks nice. So this is the one that I can see that it's nicely trending and it continues to trend higher. So perhaps that one, maybe let's take a look at CAD Swiss franc. As you can see, that CAD Swiss franc just broke out to a new low. So Euro CAD and CAD Swiss franc definitely looks the best here. But outside of that, I think that's where I like a little bit better here. Dollar, we are sort of divided here. So I think we can take a look at dollar CAD going into next week, see if it breaks that 139 level. But outside of that, what I would say is that just still keep the powder dry, because I can look at all these things, but when things are stuck in that range, then what you don't want to do is make a decision saying, I think it's going to break out, because, well, you don't have a confirmation yet. You have levels, look at this pound, 1, 2, 3, 4 times the levels. So you still want to respect these support and resistance levels until we really get a breakout confirmation. But meanwhile, where you can find good opportunity is being at the right place at the right time. Like today, when we had a nice jobs report, it was expected, had a nice move. Now going to next week, we'll take a look at inflation data. And then the following week, we have the FOMC rate decision. So there's a lot to unpack. No need to rush. We need to kind of play it slow and steady and let the market tell us when it's the right time. So let's just wrap things up here. U.S. inflation data is in focus next week. I will be taking a close look at it. I'll be posting things in the Discord, so make sure you watch that space as well. What I'm watching for really here is these key levels in currency baskets. We have gone in the sideways range for months now. Now, is there going to be a break? And is there going to be a confirmation? That's what I look for. You need to look for a confirmation of those breaks, because things can stay range bound way longer than you would anticipate. So confirmation is very important. And based on that, we make those adjustments. So not a whole lot of change yet, but we are at just the beginning of this. This is going to be a long month ahead. So keep dialed into the markets, and I think we'll probably see good opportunities in the next coming week ahead. Thanks for joining here. Enjoy your weekend. We'll see you the next week. Bye-bye, everyone.